Good morning, everyone. Good morning. Welcome to Power Hour with Sergio every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Um, Red Hat is on. Red Hat's been on last couple days. Um, don't have much really to talk about other than the same things, right? Nvdia earnings to come out. Good earnings, good guidance. Market's not listening. Stocks getting sold off, and I'm not going to say it's expected, obviously, because if you take us back to 6 months ago, and if earnings were like that, stock would be up 10%. Well, we're getting the opposite now. That's called distribution, folks. So you got to pay attention to distribution. The market has been on a distribution mode for a while, actually, especially the indexes. And I did a video last week about indexes are stuck because Max 7 is stuck. So S&P 500 being a market cap weighted index, it's going to be stuck. Now the question is, there's definitely massive rotation going on, right? We all know where the money is going. Are they going to sell those? And once they do sell those, that's when the indexes are going to go lower. Indexes have been going sideways for literally months now, but specifically in a very tight range between 671 and 695 on SPY for at least 2 months now. And that's as tight as we can go without a breakout or a breakdown. And the longer we go sideways, the more violent the move is going to be either direction. I don't know which way it's going to be. I'll just listen to the market if it's going to do it. And when it's going to do it, because we don't know. If anybody says they know, they're full of it. But underneath the surface, a lot of stuff is going on, right? And if you looked at the indexes, you wouldn't think your stock would be down 50% or up 50%. But there are stocks that are doing very, very well. There are groups of stocks that are doing very well, and there are groups of stocks that are absolutely in the toilet. And most of the stuff in the toilet is the ones that Wall Street decided a couple of months ago, compressing the PE valuations, right? Anything with high growth is getting absolutely shot, even if the earnings are meeting or beating expectations, they're just getting shot. That tells you something, right? So if your holdings are high beta, high PE, high valuation growth names, you're suffering last 2 months. And that includes many major names that a lot of people talk about. But that compression is continuing. And does that mean even after massive sellouts on these stocks, that the stocks are cheap? No. But what is happening is that there's definitely rotation going on. Rotation meaning, when Nvdia sold into the hundreds of billions of dollars the last 2 days, where's that money going? It's not going to T-bills. It's going into the market. It's going into certain groups. It's going into consumer cyclicals. It's going into base metals. It's going into precious metal miners. Yes, those are not massive, mega cap companies, but they are big companies, right? And it's going into gold. It's going into silver. It's going into treasuries. So money's always rotating. Money cannot sleep. And if you are asleep at the wheel holding something that's already down 50%, with the index is only down 2%, what's going to happen to that stock if the index sells off 15, 20%? Stock's going to be ugly. It's going to get cut in half again. So my goal is to inform and educate. None of this is financial trading or investment advice. Do your own due diligence. As much as I know, I don't know. I'm learning. I'm experiencing things, although it helps quite a bit to have seen all the possible horror movies in the past. And there are some veterans who understand what I'm saying. And but if you're newbie meaning I call everybody a newbie who started during the pandemic, because 5 years is really not enough time for you to understand the markets. And you had a wonderful time for 5 years. I'm not bearish, and I don't wish a bear market, because in a bear market, if we do experience a bear market, I think a lot of people are going to get wiped out because they're still stuck in the stocks only go up mode. Yes, over long periods of time, stocks go up. Great company stocks, not companies like HIMS and things like that, or some super high valuation, no earnings companies. You know, stocks like Amazon and Meta and Microsoft, and maybe not as much, but Google, and you know, all these stocks do benefit from a market. So a rising tide, right, will lift all boats, and it's not lifting Mag 7. That's why the indexes are stuck, but it's lifting a lot of other stocks. And the massive amounts of money that's coming out. First of all, institutions, when there is a sell-off, what do they sell first? They sell the most liquid stocks. What are the most liquid stocks? Well, that's the Mag 7, Mag 10, right? So money goes out, but money goes into something new, rotates into something new that doesn't have as many shares as these companies do. So the moves are actually exaggerated on the ones that they're benefiting from the rotation. And you know, it seems like to me, rotation is something you can easily figure out on your own. It's really not that difficult. And we have all the tools now these days. In fact, there's color-coded screens now. I think TOS has one. In fact, I may even take a look at it. So actually, yeah, I think that's a good idea. So yeah, I'm reducing some positions. I mean, they're holding pretty much even. I sold a bunch of put credit spreads expiring March 20th. And if the market's going to sell off, if it's a big if, I don't want too much exposure. I do have some put debit spreads on SPY. I'm trying to buy some more. I may actually short some futures if I see a rollover. But this rollover or breakdown or breakout is going to be violent and quick, and you better be there if you're a trader. If you're not a trader, if you're an investor, you just put your head in the sand and go along with it. I have a video coming out today at noon in a couple of hours detailing my long-term port. I don't even know why I'm trading. It's doing really well. So I don't trade those. I buy and hold. There are 5 stocks, and the details aren't going to be in the video. So my group knows what stocks they are. And as far as trading is concerned, I'm trying to weather the storm like everybody else, trying to keep my head above water without losing too much equity. And you know, unlike a lot of folks on social media who only make money, when market goes down, they make money. Then markets go up, they make money. I don't know if they ever lose money. But the long story short is, if you're closely watching the markets, it's been brutal. It's been boring, because if you're shorted the indexes as a hedge, you're losing money there. And if you bought certain stocks that we all know about, you're getting smashed. Okay, so they're down already 50%. Like a hood is down 50%. SoFi, that everybody loves, talks about, is down about 50%. What do you think is going to happen to SoFi and Hood and some other, you know, Palantirs? And what do you think is going to happen to those stocks if the market sells off 20%? When I say market, the index, they will not go up. I can assure you that. But I'm cautious here. I'm not bearish, but if we do roll over, I'm going to turn short-term bearish, and I'll press on the downside. I mean, I know how to short stocks. I know how to short indexes. I know how to buy puts. I know how to short futures. So that's what you do, you know, because things go down 3 times as fast as they go up. That's a fact. There are many, many examples of that, right? I mean, for example, today's big victim is Duolingo. The stock was $530 a share a year ago, not even. And it just hit 90. I mean, when do you take an L, right? I mean, it's closer to 0, right? But, or HIMS is 70 to 15. When do you take an L, folks? I mean, a lot of people don't know how to take an L. L meaning the loss. You got to take the loss. And the reason you got to take the loss is because number 1 is capital preservation. Number 2, opportunity cost. Was while you're stuck in something, hoping and praying. By the way, math is math. Let's talk a little bit about math. A lot of people who maybe are math challenged, you know, they hold a stock that goes from 20 to 10. That's down 50%. When the stock goes back up 50%, it's only going to get to 15. It needs to go up 100% for you to break even. That's a tough ask. So I would highly recommend you folks understanding the math first before you jump into something and then keep dollar cost averaging, because it's just going to take you to the poorhouse. And you have to take an L. Why? And the second reason you have to take an L is no opportunity cost. The world is going by you while you're stuck on something that may or may not work. You may have an opinion about this thing, right? But you don't know any better. The market knows. Market's telling you that's the price right now. You may have an opinion that that price is wrong. Good luck arguing with the market. I've done that quite often. I don't think I've ever won. The market's going to do what it's going to do. The market's not going to ask you. The market doesn't care how much money you have. The market doesn't care how much knowledge you got. The market doesn't care how much experience you have. What those things do, experience specifically, which cannot be bought or taught, okay, comes over time, comes with having seen some of these horror movies that took place in 2000, that took place in 2008, and then, again, the pandemic, and then the April, crisis. We do have these things. We have some black swans show up once in a while. But ultimately, on long periods of time, if you have quality stocks in your portfolio, and if you're an investor, let's designate the two. These days, a lot of traders are turning into long-term investors because their hands are tied, because they don't take the L. What they do is they go, yeah, it'll be fine one day. It should be okay. No, it's not going to be okay. What it's going to be is that you're going to be stuck in the stock for 5 years, hoping to break even, unless you have unlimited amount of money in a printing machine like the Feds do. That's a different story, obviously. But while you're waiting, you're missing the whole world go by you. You're missing a lot of wonderful opportunities, such as metal miners, such as base metals, consumer cyclicals. What are the best stocks that have performed amazingly over the last 3-4 months while we're going sideways, right? Take a look at Walmart. Take a look at J&J. Take a look at Southwest Airlines. Take a look at UPS. Take a look at all these stocks, right? A lot of stocks, and the ones that haven't worked are which? The ones that are high-value growth stocks. Market doesn't like those. PE compression going on there. But all the other stocks I mentioned, they have solid earnings, solid cash flow. None of these stocks, the joker stocks I call it, like IRENs and NBIS and, so-called power generators for the data centers that's being built, they have no earnings. They may never have earnings, okay? I mean, we don't know. So, but markets deciding, okay, these things are not worth the paper they're printed on. Well, they are probably worth the paper they're printed on, but the valuation is too high. We need to, fundamentals do matter. A lot of people discount fundamentals. Fundamentals at some point matter, and when it matters, before you blink, your stock is down 50%. Or in the case of Duolingo, down 80%. Or in the case of PayPal, down 80% over the last couple of years, right? Because if you are holding, so the opportunity cost part is this. For example, you're holding PayPal. Good company. Nothing against, PayPal. But it's an outdated company. It's not with the times. Yeah, they have Venmo. They have all these other things. They have good cash flow, but the Wall Street is deciding that that company is not worth 300 that it was a couple of, during the pandemic. Well, it's down to 40. Just because it's down 80, 85% doesn't mean it's a good value. I'm not sure, but the Wall Street doesn't think so. At some point, when do you cut that though, right? I mean, 10%, 20%, 30%. Again, think about it. If you had cut it at 10%, where would you be today? You wouldn't miss all the wonderful other opportunities, right? So that's the opportunity cost. Sometimes you take the L, it's fine. Taking an L is fine. And then you live for the next day. You have some dry powder. The key is on markets like this, especially when the market's going up, anybody can make money. Any fool can make money. You can throw a dart on a newspaper or whatever, and you can make money. But when the markets get tough, like it's been for this year especially, again, not in the index investor, not for the passive investor, but if you're an active investor, you're getting hammered, especially if you're in high growth, high beta stocks. So what is the solution for that? Well, the solution for that is take the L. Because once you turn from a trader, again, the designation is immense. Traders, investors are two different things. But I met so many of those traders, short-term traders, turn into long-term investors because the market forces their hand. And they get emotionally involved, they create biases, and they cannot separate themselves from the stocks that they have bought and they're down 50% on. Well, if you wait for the stock to go down 50%, now it has to go up 100% for you to break even. That is a very, very tough ask, especially if the indexes start selling off. So it's not advice. It's none of this is, I know better or this. I've seen it. I've experienced it. So that you have to learn by watching folks like myself and whatever not. But again, I'm not a gloom and doomer. I trade what the market is giving me. I invest. Okay. Investing is something else. Trading is completely different. But don't become an investor being forced by the markets from a short-term trader. Trading is short-term. We're all trading short-term options, month out. If you're a Tasty fan, 40 days out, they sell options, do this. Okay, let's say if you sold options on Duolingo yesterday. Maybe you sold a naked strangle. Yeah, your calls are going to print. Okay, they're all going to go to zero. But what's going to happen to the puts that you sold? Let's say you sold a naked strangle on Duolingo yesterday for $10. Going out a week because the IV is high, premiums are high before earnings. Okay. Stock was 110, right? You sold it for 10. Calls are going to go to zero, but where is the overall position going to go? Stock opened at 90, I think at 85 or something. They're going to be 25. You're down 150%. So if you don't take the L, what are you going to do? Now you start becoming the long-term investor, meaning now you have to go roll up, roll away and down if you're a roller, which you will be forced to roll unless you want assignment, right? Now you have to, in order for you to roll with credits, right? This is what a lot of fools on X don't tell you. Oh yeah, I did this, I did that. And then some idiot will say, oh, my calls are printing today. Yeah, your calls are printing, but what about the puts? Right? So you're down. Okay, you're rolling away and down. Then I have to go out 6 months. Well, you're tying up capital to do that in order for you to do that. And ultimately, what is the goal? Even if this Duolingo goes from 90 to 150, you're just going to collect that $2 premium, pick up those pennies in front of the bulldozer, right? While you're missing a 30% move on the stock because that's all you can do. Markets force you to roll, go 6 months out. In those 6 months, the world can come to an end or the market, SPX could be 8,000. You just missed the whole thing. Again, unless it depends on your bankroll, but I don't think any of us have Federal Reserve bankroll. I don't think money grows on trees. I don't think we can just go print money and put more money in our account, right? So these are the things I want to explain and educate folks about because since the pandemic, I believe risk assessment or risk management has left the building because everybody's like, I buy today, tomorrow it'll be higher. The greater fool theory. I'll buy today, tomorrow somebody will buy it from me at a higher price. I experienced that on the desk in the year 2000 bubble. Is it the same? Absolutely not. But are some stocks acting like the 2000 bubble? Absolutely. I mean, if a HIMS can go from 70 to 15 and you're holding the bag all the way down, and now what does HIMS have to do, by the way, for you to break even? Even if you bought it at 50, 40, 30, you waited, you patiently waited. Another thing is trend is your friend. If you're a trader, trade with the trend. If the trend is down, don't trade. Or short. Why don't you short? Why don't you sell calls or sell call credit spreads? You're going to make money on the way down, folks. You'll probably make more money and faster on the way down than you would make on the way up. Again, I'm not bearish. I will be bearish if the market rolls over. I will be quite bullish if the market breaks out of this range. All we're doing is gathering energy now. And it's going to be one violent move. And everybody's waiting for it. So am I. So welcome to Trading with Sergio every Friday. And then Mondays we do Trading with Sergio on Mondays and Wednesdays, 10 a.m. Pacific, 1 p.m. Eastern. I don't know how much longer I'm going to do this. The live shows, or I may do one every day and then cut down on some other things, or I may create a free Discord channel for financial education. I don't know. I'm debating things with my team. But you guys will know when I know. And yeah, so welcome. Hey, we got a new member. HSIN HAI 24. New member. Welcome. Oh, and since he joined, I have a Telegram chat members group. if you're interested, go click join and send me an email, Sergio@sergioavadian.com. I will send you the Telegram chat group link. What do those folks get? They get a lot. They get a lot. What do they get? Well, first, they get all my trades. Again, none of this is trading, financial, or investment advice. They get all my trades live. They get a summary of my positions at the end of the day. They get their own live stream once a week, Wednesdays now, back to Wednesdays from Thursdays, which is really cool, where I can teach on one-on-one basis. And yeah, they got a lot for a Big Mac, so if you're interested to join, like this gentleman did, click join, send me an email, Sergio@sergioavadian.com. So good morning, good morning. Mr. Premium is here. Hey, Mr. Premium, happy Friday. Are the calls printing today? Yeah, sure. Calls are printing. Cool. Hello, Doug, Traveler, Mike, John. What's up, Party Loose, Mike? What's going on? We can go through positions. I'm actually looking to cut some exposure. I'm like 65, maybe 70% cash. StreamYard, don't fail me now. Did you freeze StreamYard? Yes, you did. Okay. Did you? Yeah, it froze. God dang it. Oh, we're back. Yeah, StreamYard is acting goofy today. But let's see if I go to the positions, the screen is going to freeze. Oh, you know what? Before I do that, I want to talk to you guys about Tech Bros. And specifically Sam Altman types. And much as I love Elon, I have to push back on Elon a little bit here as well. So AI, right? We all know it's coming. It's here. It's not coming. It's here. You all use ChatGPT, but there are many other ways of using AI, right? Okay. So yesterday, you all know who Jack Dorsey is, the founder of Twitter, okay, the ex-CEO of Twitter, who is the CEO of Block now, which owns Stripe and all these other wonderful companies, right? Okay. Companies growing, companies doing well. I mean, stock price was not doing well, but in general, the company is doing well. All right, Jack Dorsey. Jack Dorsey, the CEO of Block. Symbol is XYZ, by the way. While you guys are watching and listening, go check out the chart on XYZ. Yesterday, they made an announcement that they are firing. Let's not be that harsh. Well, they are. They are firing almost 50%. 50, not 5, not 15. 50% of their employees. All right. Why? AI agents are doing what these transactional companies. Now, I was on TJ stream an hour ago. I think PayPal should do the same thing. I think, this is what's going to happen with AI. If you guys are listening to Sam Altman, the top snake oil salesman of the century, he says, oh, AI is going to create wonderful opportunities. Hey, Sam, go talk to those 5,000 people who just got laid off from Block. Maybe you can give them a job at OpenAI. Huh? Yeah. And by the way, folks, you have to understand how this could affect the general economy. These 5,000 jobs, they're not cleaning toilets at Block. They're high-paying jobs. They're mostly probably mid-six-figure jobs. So these 5,000 people all have mortgages. They have car loans. They have all that. They have families. There goes the income. As good as a severance package as they may have, it's not going to last that long. Health insurance, right? That's not going to last that long. So these 5,000 people got replaced by AI. While a lot of snake oil salesmen out there, and some tech bros especially, so like Chamath and a couple other fools, go, oh, AI is going to be wonderful. For who? For the average American? These are high-paying jobs that got replaced. You don't think AI is going to replace every blue-collar, white-collar job out there, with the exception of the trades, right? So, let's look at the financial. Let's compare actually two companies. Let's look at Salesforce.com, CRM, huge company, right? Tom Benioff's company, and let's look at Block. So, Block literally laid off 50% of their workforce yesterday. That's going to create savings, annual savings of $600 million for Block. Okay. They all got replaced by agentic AI because they said, well, we're building all these tools. We don't need humans to do this work. AI agents are going to do this better. I agree. And so let's look at the two companies and their reactions to the actual news event. What did Block do? So they laid the people off. 5,000 people are now looking for jobs. Do you think those 5,000 people can go get another job with another PayPal or a Block or that type of company or Lemonade or whatever? No, AI is replacing all of these people. High-paying, white-collar jobs. Okay. So annual savings of $600 million for Block. How much did the market cap of Block go up as soon as that announcement came out? Last time I checked, it was $6 billion. So 5,000 lives potentially put to harm because they got replaced by AI. While the snake oil salesman Sam Altman says AI is going to be wonderful, it's going to create massive opportunities. So Sam, you should go give these people jobs. No, of course not. But 600 million in savings translated itself into $6 billion in market cap gains for Block. Now, some of you may say that's fair. Some of you may say that's capitalism. I'm a capitalist. I was on Wall Street. But I'm not a vulture capitalist. I'm a fair capitalist, and I've been saying this for a while about AI. And now my pushback to Elon. I love Elon. I think he should live forever. But Elon, a few months ago, was on Joe Rogan's podcast, one of my favorite podcasts. He was just Joe Rogan is a little bit of a meathead. He doesn't understand finance. I like Joe Rogan too, but he has no business talking about finance to Elon. Elon said AI is going to create high income. Now, as we know, Elon was a huge proponent or a supporter of UBI, Universal Basic Income. Because you have to understand, folks, every truck driver, every Uber driver, those are the mundane jobs, these high-paying jobs, every UPS driver, all these people are going to get replaced by autonomy. It's happening in front of our eyes. And this agentic AI, all these middle agent companies like PayPal's and Blocks and Ubers and all these other companies, they're just basically the agent. They're the middleman. eBay, right? They're all the middlemen. They should all use AI agents. They're going to just let go of all these thousands of people. And it's happening at Amazon already. It happened at UPS. And as a capitalist, that's the day I bought UPS at $96 a share. They announced 40,000 layoffs. Amazon announced 30,000. These are big numbers, folks. And since we're a consumer spender society, and these people just got laid off and income disappeared, what is the effect of all these layoffs on the general economy? And this is just starting. But what Block did, I'm afraid, is the playbook now. We replace half the workforce with AI, and our stock shoots up by billions of dollars in market capitalization. Simple. Now, let's talk a little bit more about Elon, and I'll finish with Tom Benioff and Salesforce.com. So Elon said, AI is going to create universal high income. Elon, I have rent due. I have my car loan due. I have my insurance due. I have my cell phone bill due. How is this going to work, Elon? So that's what Joe Rogan did not ask. Like, okay, I get it. It's wonderful. We're all going to be in utopia because of AI. everything's value is going to collapse. Energy is going to be free. Food is going to be free. All this is going to be free. Well, how about the other stuff that I need to live? How about my purpose in life? No, as a human, we're going to not have purpose. So Elon goes, universal high income. It's going to be utopia. We can all play golf for 24 hours a day. Well, what's my existence for then as a human, right? So there's a deeper issue. And to go back to Salesforce.com, if anybody understands this, by the way, what Elon means when he says, universal high income, does that mean cashless society? We have a cashless society, but where is my income going to come from for me to go on a vacation for the rest of my life? So I have to do it with money. I mean, if I decide on go on a cruise, I have to pay for it. Where's that money going to come from? Because I have no income now. AI replaced me. I have no income. What am I going to do? Right? So these are the snake oil salesmen like Sam Altman who are not answering these questions. I mean, the writing is on the wall. If you're ignoring the writing, you're in a tunnel. You see the light at the end of the tunnel. That light is not the exit, folks. That's the train coming at you. If you have a job that could be replaced by AI, please think of plan B, C, D. Because it's coming. It's here. Block did it. So what did Salesforce do? The two different management styles. Jack Dorsey said, chop, heads off, 50% gone. Stock value goes up $6 billion, $7 billion overnight. Okay. Salesforce had their best year when it comes to revenue, 42 billion in revenue, great cash flow. They said, well, Tom Benioff said, we're not going to lay anyone off. We're going to buy back our stock. And we're going to make sure AI gets our people better. What do you guys think CRM stock do after the earnings, after that announcement? Do you guys think it went up 25% like Block did, or did it go down? It went down. So Wall Street, the fat cats, I was on Wall Street. Don't shoot the messenger. This is the new playbook, folks. You're going to hear this more and more and more and more. Companies are going to lay off thousands of people. These are the people who are spending their hard-earned cash into the economy. If that slows down, what is the effect going to be on the economy, since our economy is supported pretty much only by consumer spending? I don't know. That's why I'm thinking this AI thing may not be as wonderful as Elon says, may not be utopia. Because if you talk to those 5,000 people or the 40,000 people that UPS laid off or 30,000 people Amazon laid off, there is no jobs for these people. And I'm not buying for 1 second what these snake oil salesmen are selling. Saying, oh, remember the horse and buggy days? Oh, we all worried that all the buggy drivers were going to get laid off. Oh, no, but they went and got jobs at Ford Motor Company that was being established. Steam engine replaced all the horse and buggies. Are we fucking kidding ourselves here? Is that an analogy? Is that a good comparison? And this is what Wall Street says. Over long periods of time, productivity gains are going to outdo, these job losses. I'm like, yeah, but this one is permanent. Because if I have this thing called AI that's better than a human, that can do everything faster and mistake-free, robots and things like that, we haven't even talked about that yet. Take truck drivers in this country. There's millions of truck drivers. Autonomous trucks are coming. Granted, they're safer. But these people have done trucking. They're being the lifeline of this country, taking your goods that was produced in China from a distribution center to your local Walmart or Target or Costco. They're going to get replaced by autonomous trucks. It's coming. It's here. What are these people going to do? Oh, they go, well, we retrained them. These people are used to driving trucks all their lives for generations. They can hardly make a living now. What are they going to do? We're all going to make them what? What are we going to train him for? A job that AI doesn't touch. What is that? Elon, what is that? How do we get this universal high income utopia, Elon? Explain it to me. because you didn't explain it on Joe Rogan because he didn't push back. If I was interviewing you, I would have go, Elon, great. We're all going to be in utopia. We're all going to travel to Mars. How do we get the cash to eat? Who's going to give me the cash? Because I have no income. Who's going to give me the cash? Right? I don't know. So if anybody knows, come on down. Explain it to me. Because I see it. I have 2 kids. One's in high school, one's in college, finishing college. Anything she learned, an AI agent can do it better. Now what? Good luck. And last but not least, Elon, Sam Altman, all these VC tech bros, go talk to the cohort. The highest unemployment rate in the country, by the way, at the moment, are recent college graduates. It's double the average of the country, close to 9%. They just graduated with $200,000 student loans. Go talk to them. Saying, yeah, there's plenty of jobs out there. Oh, by the way, but in 6 months, you're going to be replaced with an AI agent. So this AI thing could, create some productivity gains for the well-to-do, but I don't think it's going to be really that good for the average American. Just because you can get on ChatGPT and create a script for a video you're going to do or some shit like that, that means nothing. You have no job. You have no income. You have bills coming. Bills don't wait. So I want to understand this. I want to understand this better. Again, I'm not a gloom and doomer. I use AI now on my channel and the other channel that I run. But, I mean, it's a simple thing. We had an editor who created shorts for us. Shorts meaning, right, 1 minute or less videos. He used to charge $30 to us, 20 to $30 for each short. And he could do maybe like 10 a week. So that's $300. But we used to pay him more because I think we pay him monthly. I think he produced about 100 shorts a month. So that's $3,000 a month, right? Here comes a software called Opus Pro. You take long content, dump it in there. Granted, it's not as polished, but shorts are come and go. They're like a little heart attack. There are billions of shorts out there. So instead of using that editor, so we put the long content in Opus Pro. In literally 2 minutes, it spits out perfectly cut, perfectly edited, with B-roll, up to 50 shorts in 2 minutes. Is it as good as polished as a human's? No, not yet, but they're getting there. And it has gotten better since we started using it. How much is that per month to us cost as a business owner? $19.99. $3,000 versus $19.99. Well, doesn't take a genius to figure that out what we chose, right? So that editor's income just went down $3,000. Where's he going to get that? Every door he knocks on, he's going to go, oh, we're using agentic AI. We're using Opus Pro. We're using HeyGen. We're using this. We're using that. So I don't know. I don't know where this is all going to end up. So, and, but yeah, I mean, I wasn't trying to rant, but I want to understand this. Like, when you lay off 50% of your workforce, you get rewarded by your stock going up 20%. To the tune of $6-7 billion in market cap gains. That's Wall Street. We've seen it many times, but it doesn't sit well with me because I have kids and I think about it. All right, let's see what's going on. Yeah, I know Dorsey, Weasel. Dorsey, I'm hoping. I don't know. I mean, he did, I guess, what's best for his pocket, like we all try to do. What's my opinion of Dell going up 21%? No opinion whatsoever. Yeah, he did fire 4,000 employees. I mean, it's not personal, my man. The subject is AI. You know what I mean? So. Patrick goes, hello, I'm a 9-year-old boy. I don't think you should be on YouTube. Okay. BTC and ETH seem dead. Yeah, they've been dead for 6 months. Anyway, so let's go to the positions. Let's see where we are. A little frozen. All right. Yeah, BTC ETH are not doing well at all. At all, I must say. Well, I'll post the positions. I don't want to go through it one by one. I'll post the positions on the community page of the YouTube channel, as I am the most transparent trader. And today, please check out the video that's coming out. BMNU down to 181. Thank God we saw some 2 calls on that a couple of days ago at 51 cents. That's a disaster of a headache. So these are all highlighted ones are all the positions I have open currently. I'm going to add either short futures or buy more PCS. I'm trying to reduce exposure on a couple of the PCS, when I say PCS, put credit spreads I have on TSLL and RCL. Again, I'll post these positions on the community page of the YouTube channel, and you guys can go check it out. I post it every Monday, Wednesday, and Friday. Again, none of this is trading, financial, or investment advice. Do your own due diligence. What I do is very risky. It's not for everyone. So, yeah, I'm trying to close the RCL, PCS at a little bit of a profit. Same thing with TSLL, PCS, put credit spreads. I actually opened some put credit spreads on DOCN today. DigitalOcean, that's doing okay. Yeah, I'm nervous. I mean, if we're going to roll over and break down here, we're in trouble here. And so with that said, let's take a look at some charts. Let's take a look at some. Yeah, we're having lag issues, but we'll see. Okay, so if put your questions up, I'll go take a look when I'm done with this. Yeah, this is laggy for sure. Maybe it's my internet. I don't know. I mean, I live in LA. How much worse can internet get, folks? I don't know. I don't know what's going on. Oh, there it is. Is it coming? This is like Wells Fargo internet. Okay, so this is RCL. I'm short 310, 300 put credit spreads on this, but let's go to the indexes. So this is SPY. I mean, as sideways as it could be. So either we're going to break out here, go to 740, or break down, and I think we're going to break the 200-day moving average as well. All right, so let's go through gold, silver, Ethereum, Bitcoin, and the market. So market did rally a couple days ago, and Nvdia did not help, so we're selling off. So we're in this absolutely tight trading range. 675 low, 695, 697 high, whichever way we break. All this is energy, so it's either going to be zoop or it's going to be zoop, one of the other ones. I hope it's not leveling like April, but we'll see. MACD is as neutral as it could be. It's just crossing back and forth from the zero, so we'll take a look what happens there. This is triple Q. Same thing, sideways. Sideways as it could be. Mag 7 stalled, obviously. That's why the indexes are going down. Here's your Nvdia. Selling off pretty hard, actually. That's 178 now, the last couple of days. 200 EMA hopefully will hold, but volume is definitely getting distribution. Massive volume on the way down. Here's Amazon. I mean, that's under his 200 EMA. It's just in this bear market as it is. Here's Microsoft in a bear market of its own. Google is the best one out of the Mag 10. It's holding well. And Tesla is about to eat it, I think. So I think I'm going to close my put credit spreads there. I mean, we're right on the 200 EMA. We better hold here. If we don't hold here, we have no business being in put credit spreads. I'm in the 15-12 March put credit spreads. Yeah, this thing can get to 12, and I don't want to ride with it. In fact, I'm going to raise the price and just get out. Yeah, I have orders in at $1. Yeah, we don't need this headache. We don't need the excitement. Yeah, we can always put them back on. Break even, small L's are better than big L's, folks. Put them all there. Yeah, we're not going to get it until we get a little push. I added to my SPY PDS 385, 685, 675, going out to March. I want to add to that some more. I added it at like 315, potential 10. RCL, I'm trying to close with a profit. Let's see if we can take him to 4 and close him with a profit. Sold him at 430. And we're right at the short strike from 3 weeks ago. Yeah, we moved him to 4. Whatever I have profits on, I'm going to take. Oh, DigitalOcean. Okay. I have a little bit of profit in there now. What else? AD&T. Okay. Nothing to do. Just wait. Wait. I need to get rid of this garbage. We'll do it later. Yeah, RCL, I did it at 430. I want to get rid of it at 4, so it's fine. Yeah, I can sell them always. You can always sell them, folks. Yeah, I want to add to the SPY PDFs for sure. Okay, yeah, that's about it. Let's go back to charts. So TLT is rallying, so flight to quality a little bit. TLT is the inverse indicator, 20-year bond. If TLT is going up, interest rates are going down. That looks actually nice if that was a chart. But all the max haven't installed. They're all looking deadly sick, actually. And what's happening is that underneath the market, there's wonderful, wonderful companies like Walmart. Okay, 52-week highs, J&J, Coca-Cola. You know, those are stocks too, folks. See what I mean? Why deal with high growth PE names? You don't want to deal with those. There's a time for those, and there's a time for these. Base metals are doing well, like Alcoa's and Freeport-McMoran's. Look at that, right? 52-week highs. As opposed to dealing with, you know, some people deal with the same stocks these days. And they go SoFi. I go, what about SoFi? Oh, getting killed today. Down to 17.5. Cut in half almost. 33 to 17. Yeah, almost half. People go, SoFi. What about SoFi? I don't know. You know? People go Google Gaga over HIMS. Over Oracle. HIMS. What about it? HIMS, under 15. Oracle. 345 high. Stock is 142, folks. Okay, here's Duolingo. You know, people just go these. Yeah, it's cheap. What does that mean? It's cheap. It's cheaper. It could get cheaper. 544 down to 97. Yeah, good luck. Good luck trying to get out of that thing. I mean, people just, I don't understand. They don't understand risk. Yesterday's was EOSA. Is it under 6 yet? Was it EOSA? EOS. No. Which one was it? I think it was EOSA or EOSE. Yeah, EOSE. It's under 6. They're like, oh, I lost $300,000. I go, yeah. I mean, you know, good luck. And here's a company that's not going to have earnings. Here's another one, Oklo. No earnings. Drawing of a nuclear reactor. 193 high, down to 62. We all know what happened to quantum computing stocks, right? We don't have to go through that. And then the next one is going to be IREN. Same thing is going to happen there. They're all going to break down. CIFR, right? NBIS. They're all pound these tables. Oh, look at this. I'm like, okay, good luck. Oh, look at him. NBIS down $15 today. And then they'll all be crying, oh, my stock's down 40%. I'm like, well, it has just started, folks. hood. There you go. It's bear market in its own bear market. While the index is down 2% from the high. Again, I'm not trying to be negative, folks, but I don't want to deal with these. I want to deal with the stocks that are being rotated into. Well, here's some of, here's silver metal stocks. Majestic Silver, new 52-week high. Okay. All the gold stocks. Gold stock ETF, NUGT, making a 52-week high just about. Why don't you guys deal with these? Or some oil stocks, ExxonMobil. Boring stock, right? Look at that. If you're going to sell puts on that, man. Because if you sell puts on anything else, you got hammered. Here's XYZ, by the way. This is, yeah, stock was up 15%. It was up 66. It was up 20%. Why? Oh, AI replacing 5,000 people. Well, there you go. There you go. And here's CRM in its own bear market. Look at that thing. I mean, I'm not even putting the 3-year charts on these things. There, I mean, you're I don't know. Look at this. 369 high. We're at 195. Here's Adobe. If you're involved in any of these things, obviously. Like most people love things when they're going down. Here's Adobe. 638 high, 260. And people go, oh, it's cheap now. Okay, cool. Good luck. You make your bed, you sleep in it. Here's Duolingo. Not too long ago, folks. This thing was in May of last year. This thing was 545. We're at 97. And there are gurus out there that just push this hard. I'm like, okay, cool. What is your business being in something that goes from 545 to 97? People go, well, it's cheap now. Compared to what? Oh, it couldn't go down another 50%? Breaking news. Things can go down 50% indefinitely and not hit zero. Same thing they're doing with, I mean, I don't know, man. Here's ServiceNow. Yeah, 240 down to 97. Interesting. Anyway, people got to do what they got to do. And actually, I was interested in Southwest Airlines. If it gets a little bit more pullback, I'm going to be all over that, like white on rice. Yeah, for sure. Yeah, I want to close my RCL. I don't want a headache. For sure. SPY, buy some more put debit spreads. If we get a bounce at the end of the day, I'm going to buy some more of these. 685, 675. Reason I'm doing a put debit spread is you don't put it, it's not like buying puts, but then you're putting up 3 to make 10. And if we do get a breakdown, I think we're immediately going to 655. So the PDSs will print at that time and cut some exposure on the long side. I have some balance in my life. I want to sleep. Yeah, Tesla, we're not getting out. It's bad. Yeah, I may have to take an L instead of break even on that. Yeah, it's under 0. Yep. We don't want to deal with it. Okay, we'll fix that when I'm done with the live. Dell, said one of my members, it's breaking out. It looks nice. You should buy it on any pullback. Yeah, there you go. I said it. Was it the earnings or whatever it was? Yeah, I'm sure it was the earnings. Yeah, what was the earnings? 331 estimate, 389. Holy shit. See, buy companies like that. The stock's going to earn $12 is selling 12 times PE or 15 PE. Market multiple, lower than market multiple. I actually like it. Yeah, beautiful. Yeah, own stocks like that. Create a list with substantial earnings. Not like this one. Look at this one, FIGR. Figure Technologies. Earnings came out. 78 down to 25. Earnings expected 12.5 cents, actual 6 cents. Going the other direction. Even if the earnings are good, their stocks are getting sold off. Especially if you're a high flyer. BC, yeah, that looks good at 200 EMA. We'll wait for that. We'll take a look at crypto. Here's crypto. Here's IBIT. We had a little pop. That died. That fizzled. People are asking me, like, is this the bottom? I go, I have no idea. Well, for people who are holding MSTR and BMNR, I hope it's the bottom. So we hit 60,000. We tested. We ran to 60 to 70,000. We're back to 64,000. So I don't know if it's the bottom. I mean, it's under pressure. All the moving averages are coming. Long-term, medium, and short-term moving averages are just coming down. That's resistance. Ooh, it's in a bear market. Done. And here's Ethereum. There it is. If that's not a bear market, I don't know what is. I mean, I'm just a messenger, folks. Okay. So, yeah. Maybe Dell I'll add to my 52-week high list, although it hasn't gotten there yet, but it looks very nice. Very nice. All right, let's see where we are. What should we get out of? Yeah, we need to get out of this RCL. I don't want to mess with it. What? I changed the order, didn't I? What? Oh, that's the SPY. Never mind. Yeah, we need to buy more put debit spread. Let's get out of this RCL before it becomes a headache and even-ish. No, they're not doing it. Son of a bitch. What do we do to RCLs at? I don't want to do it at a loss. 425. Okay. Oh, we just did it. Thank you for 420. We made lunch money. Yay. Reduce exposure and buy more puts. Okay, we can do that. Yeah, Tesla is dead. Shit. We need to reduce exposure there for sure. Any bounce now? Surge. Where do we do those put debit spreads? 90 cents? Yeah, we may have to give him a little bit of money. We may have to do that. Just at least reduce exposure there. Yeah. Losing 15% now is better than losing a lot. Yeah, we'll cut that. That's good. Reducing exposure. Live for another day. 105. 105 and 95. Okay. Sounds good. 140. All good. Okay, feel better. We have more orders to buy. Put debit spreads. We have that. We have that. Okay. We can close this one with profits, actually. 180 on BMNU. Garbage. Seriously. AD&T I like quite a bit. I added to that this morning, so we'll keep that. Okay, we're pretty balanced now, actually. Okay, what else am I looking to do? Not much else. Wait until Monday. Let's see how they close the market today. Let's see if they give up the ghost at the end of the day. All right, it's 11. I'm going to go have a cup of coffee and enjoy the weekend because it's wonderful weather in California. EOSC, yeah. Okay. Oh, Marcio's here. Hope you made it home well, my man. I think I'm frozen again. Am I? No, back here. Back at the ranch. BTC TSM. Hey, Marcio. How was your trip back? Feel like the market's flipping over because of mega caps. Yeah, I mean, it's just holding it, man. It's holding it. It's holding it because the 450 other stocks are doing so much better than the Mag 10. 585 on what? On triple Q? Yeah. Yeah, same thing with 675 on SPY. EOSE. Doug, please. You know better. You know the answer to that, Doug. Oh, you're telling me what it was, the OSC? Yeah. Yeah, that one. Yeah. I did great. Good. It was fantastic. Yeah, sir. Likewise. So if any of you do come out to LA, please look me up. We can have dinner like we did with Marcio. I have a couple of members who, if you're going to travel, if you're going to come to LA, please let me know. We'll have a good time. I appreciate it. No, it was a great time. Thank you. Thank you for bringing me up. All right, folks, I'm going to go have a cup of coffee and finish the day. And other than that, keep your powder dry, folks. The other side of the coin is not as happy as the shiny side of the coin. There's always a possibility that things can go bad. And I'm not saying, again, I'm not predicting it's going bad. I don't wish for it, because a lot of people don't know how to handle down versus up. They increase exposure. They increase size when things are going on the way down. Please don't do that. Please size correctly. Please be patient. Whatever analysis you're using, don't get your emotions involved. Don't create a personal bias. This is not personal. Wall Street's looking to take my money as well as yours. You just got to have it in you to take the small L before it becomes a much larger L. Live for another day. Always play for the next day. Have enough bullets to shoot, because that's the problem. You hold, you hold, you hold. It keeps sliding, it keeps sliding. It never gives you a break. And then you're out of cash, out of buying power to do new things that you must do in order to come back, because the stock you're in is not the one that's going to bring you back. Okay? Opportunity cost is real. Understand all this. And if you don't understand all this, I'm sorry. I'm sorry. What to say? All right. You have a great weekend too, man. Market's tough. Yeah, it looks like it. Looks like they're rolling over. Yeah, I see. I agree. See, that's a veteran right there. He's not saying it's going to happen, but he got froze again. God damn it! I hate this. StreamYard. Okay, Max 7 shits the bed. We're in for some pain for sure, without a question. But some of the Max 7 shits the bed already. You know, outside Google, they're all shitting the bed. You know, Microsoft, Meta. Yeah, I mean, they're Nvdia is kind of rolling over now. Tesla. All right, thank you for watching. Please put a thumbs up. It's free. If you're interested, go to my website, sign up to my weekly newsletter. It's free as well. Totally free, like free. So I'm going to say two things. May all your longs skyrocket, and may all your shorts tank. And last but not least, financial freedom through financial literacy. That is the key. Let's help improve financial literacy in the United States, because it's in the toilet. It includes trading, it includes investing, all of that. We don't teach it. We need to teach it. We need to do a better job. Financial literacy is not achieved by some 26-year-old joker driving a Lambo that's fake because he shows some P&Ls that he made $1 million trading futures or whatever. Financial freedom is created over long periods of time with patience and with compounding. All these jokers, they're all going to come and go. Who stays? Veterans stay. Longevity, patience. You stay. I know you may be a younger crowd, but you could learn a lot from folks like myself, and there are a couple other folks on Twitter. But, we want instant gratification. That doesn't come fast. It takes time. And so financial literacy is your path to financial freedom. So with that said, hopefully I'm wearing a green hat on Monday. I doubt it. I'm wearing a green hat on Monday. I have a green hat or a black hat. So red hat is on today. It looks pretty nasty. All right. Have a great weekend. Enjoy it. Hang out with family. We'll see you guys on Monday. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern.